I'm Tim Kelly and welcome to this week's Video Insight. Today I want to talk about the investment appeal of long-term compound growth and give an example of a company that we think has outstanding growth potential and is trading at a level that may not fully reflect that potential. The company is ASX-listed Megaport, which is a world leader in an emerging growth industry, networking as a service. To give a very quick overview of what that means, the internet is essentially networking as a service. As an internet user, you don't have to worry about designing and building all the fibre optic connections between your computer and the rest of the world. You simply pay a monthly fee to an internet service provider to access a network that's already there. For enterprises which have large mission-critical computing and data loads, Megaport provides a similar service. Instead of designing and maintaining the necessary high-grade network connections themselves, enterprises can buy access to the Megaport network quickly and easily, which means that they don't need to have in-house networking expertise themselves and can focus on the things that are critical to their businesses. In recent years, Megaport has built a global network that connects into hundreds of data centres around the world and into the major providers of enterprise cloud computing like Amazon Web Services and Microsoft Azure. And the Megaport network continues to expand to cover more and more of the sites that potential customers would like to connect together. As coverage improves and enterprises come to appreciate the benefits of procuring networking in this way, Megaport's revenue has grown at rates in the order of 40 to 50% per annum. And here's where we come to the critical question for investors, which is, for how many years into the future might Megaport be able to sustain very high rates of growth? This question is critical because of the effects compounding can have when growth is high. To illustrate, if a business can grow at 40% per annum for 5 years, then $1 of annual revenue today will turn into more than $5 of annual revenue in 5 years. However, if that growth can be sustained for 10 years, $1 of annual revenue today will turn into almost $30 of annual revenue in 10 years. If you also consider that operational leverage makes each incremental dollar of revenue more profitable, you can get pretty excited about a business with a long growth runway in front of it. While we expect Megaport's growth to slow down somewhat, our research leads us to think that it's at the early stages of a networking transformation that could run for well over 10 years. And if Megaport is able to sustain a strong market position as that change develops, the company is likely to become extremely valuable over that time frame. There's always a lot of uncertainty in forecasting that far out into the future, but in this case, we think that the odds are in favour of patient investors, and so we're happy to be on the Megaport share register. That's all for this week. We'll be back with more next week, and in the meantime, you can follow us on Facebook and Twitter.